The oil market is becoming bearish again. The uptrend may be cancelled by the upcoming events next week. The ruble may stay afloat thanks to the foreign currency sales by the exporting companies. However, traders are likely to close positions ahead of the weekend, thus limiting the ruble's growth. On Friday, both oil benchmarks are trading lower. Still, the energy market looks rather strong. In the morning trade, futures contracts with the nearest expiration fell by more than 1%. Later, the pace of decline slowed down. Brent oil futures for March were trading above $65 a barrel, while WTI crude settled at $63 a barrel. This is a weak support level, and the price may easily break below it if oil bears assert their strength. Another reason for a sell-off was the overall worsening of the market sentiment, which led to a lower risk appetite among investors. A stronger US dollar puts pressure on the oil prices. In addition, traders prefer to close long positions on oil ahead of the OPEC Plus meeting. Investors are worried about the upcoming meeting of the cartel, as its members will reportedly discuss the easing of the output cuts. This will bring additional supply volumes to the market, while the level of demand is still far from the pre-pandemic values. Saudi Arabia may refuse to fulfill its voluntary obligations on production cuts. In this case, the energy market will see another extra 1 million barrels of oil per day. Today's moderate correctional decline may easily turn into a deeper fall, so we should not rule out the start of a bearish rally. If this scenario is confirmed, then Brent may drop to as low as $60 per barrel. In the meantime, oil is about to post gains for the fourth consecutive month. Since early February, the prices rose by 17 to 20%. The ruble was trading firmly higher yesterday until the New York session started. A massive sell-off in stocks triggered a drop in emerging market currencies. The yields on the 10-year Treasury note were up by 1.56%. In the short term, the change in government bond yield is likely to determine the market sentiment. If the US stock market fails to win back its losses in the coming sessions, the wave of decline will continue. On Friday, the fundamental background is moderately negative for the ruble. The Russian currency made several attempts to recover after yesterday's losses, but it lacks drivers for further growth. The level of 73 against the US dollar becomes stronger each time the ruble tests it, so it is unlikely to break through this mark in the near future. Today, the dollar-ruble pair is expected to move lower within a correction and consolidate near the upper boundary of the trading range between 73 and 75. However, the ruble may come under more pressure in the course of the session. Falling oil prices as well as negative dynamics in emerging market currencies, including the Turkish lira, serve as bearish factors for the ruble. In case the external market sentiment deteriorates, the greenback will try to test the level of 75 rubles. Its next target will be the mark of 76, but this scenario is unlikely. Probably a downtrend in the US stock futures will not last long. Next week, all attention will be focused on the OPEC Plus meeting. Oil may face a correctional decline if major oil producers announce a change in production cuts. This will be another negative factor for the ruble. However, the interference of the Russian Ministry of Finance may offset the negative background. Currency interventions carried out by the ministry protect the ruble from a strong reaction to the changes in the oil market. And that is all for now. Thank you for watching and stay tuned.